9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching the China Show. I'm Yvonne Man. We're counting down the open of greater market opens there in China. And our top stories this morning: Asian stocks rise as cooling U.S. inflation boosts prospects for more decisive Fed cuts next year, despite questions about the quality of the data. The Bank of Japan expected to hike its key rate today to a 3-decade high, with investors watching for clues on Governor Ueda's plans for next year. Also ahead, TikTok signs agreements to create a U.S. joint venture majority owned by U.S. investors. And Nike shares fall in late trade as weakness in China and the Converse brand overshadows a quarterly sales beat. All right, quick look at the market action on this Friday morning. It looks like it could be a happy one as we count down, of course, to the weekend. And you got to think, of course, that U.S. CPI print, flawed or not, right? If it's Swiss cheese print, as some have called it, given the holes that we might have seen in this data, it really was enough to at least turn the Fed doves a little bit more bullish on really what the rate cut cycle is going to look like next year. So that's why you saw stocks were bid up. Treasury yields were heading lower as well. So that certainly is lifting the risk sentiment here across the board in Asia. Taipei is certainly seeing it with gains at 1%. Now things have come along there. The Treasury market is doing this. We're holding on to some of the yield drops that we saw overnight there. 4.12 for U.S. 10-year yield. Gold is seeing a little bit of pullback there, but interesting call from Goldman Sachs. They're saying that gold prices could head to new records for 2026. So in terms of the commodity side of things, they're expecting 4,900 by the end of December 2026 when it comes to bullion there. Silver obviously has been doing very well. We're extending some of the gains and strength that we've seen of late here. So there you go. Dollar is doing this here. Obviously, we have seen a little bit of more hawkish commentary coming through after the ECB as well as the BOE met yesterday here. ECB held, but they talk about the growth outlook being pretty firm and both suggesting that there's really limited room for further cuts there. So 133 for sterling here right now. Of course, we're watching the Japanese market very closely. It's come down to this, right? We've been waiting for this for weeks now. Has it all been priced in? That CPI print that we got out of Japan seemed to make this BOJ hike today almost a done deal in some ways, right? So the BOJ is set to raise rates the highest in 30 years. You see how, when it comes to JGB yields, not a whole lot of movement here right now. Dollar yen is actually back on the softer side of things at 155, 156 levels here right now. Mizuho says if it's a dovish hike, if we hear from any guidance from Ueda that suggests that they're going to be quite cautious in terms of when the next rate hike's going to be, that may push dollar yen towards 158 levels as well. So certainly we'll see what the direction of travel is going to be for the yen here throughout the day. But here you go. When it comes to your China setup, it's pretty quiet overall. Of course, we'll talk a little bit more about this TikTok, the new developments there. They've signed agreements for a U.S. sort of JV that includes the like of Oracle. Still needs the approval from China, but certainly when it comes to futures in this market, slightly higher here this morning. It's pretty quiet though, as we talked about, but 703 still seeing some strength when it comes to the currency here today. So that Yuan fix is obviously on the top of the agenda here today. Nike suppliers as well, given the slowdown that we're seeing in China. The Converse brand certainly was seeing some weakness there. We'll talk about what this means for suppliers here in the region, which are already moving. Also, what does this mean for some of these big domestic brands and athleisure brands in China as well that are doing quite well? We talked about the TikTok link stocks, given the developments there with that JV in the U.S. There are some trading debuts as well. We're focusing on Cidi, Juhui Mining, I should say, among those here. Cidi, of course, is when we talk about autonomous trucks in the mining business will be quite interesting as well. We do have an exclusive interview with the CEO coming on, and there is a CGB sale to wrap up the week as well. All right, let's get to our top story, which is, of course, the Bank of Japan, widely expected to raise its benchmark rate today to the highest level in 3 decades, and a sign of growing confidence in a stable inflation target. Let's bring in our senior editor, Brian Fowler. He joins us now from Tokyo. It means, what you see with the CPI figures, right? How do you think those figures that we got today fit into this puzzle?
Well, Yvonne, so let's just start with BOJ Ueda. He sent very clear hikes in recent weeks that the hike is coming. And he hinted the same in January, the last time they increased interest rates. So That's why the market was very much expecting this hike, and it's priced in. The CPI figures we had this morning only added to the case for a hike. We saw the core rate at 3% for the second straight month, and that's actually the 44th straight month in which inflation has been at or above the BOJ's 2% target. So the data, just one last green flag for a hike. The focus, of course, is going to be on what's next, and we'll be looking for Ueda's comments. Just to point out that Ueda, on occasions when they have hiked interest rates, he tends to sound a little hawkish. He's an ex-academic, so he kind of becomes the professor explaining why the hike was conducted, and that makes him sound hawkish. We'll be looking for any kind of clear hints on what the pace might be in 2026. I will say that we spoke with an ex-senior official at the BOJ, Hayakawa, last week. He's known Ueda for 40 years. He says he thinks the BOJ has fallen a little bit behind the curve as it was kind of trying to figure out the impact of Trump's tariffs and how political uncertainty would roll out. And he thinks that the BOJ may hike at a 6-month pace twice next year, and then one more, taking the rate up to 1.5% sometime in early 2027. We'll see if other people send signals to that effect.
Yeah, the path for next year is interesting. I think, as you mentioned, it might be a 6-month sort of cycle, right? I think most are priced in for the next move and maybe next summer, Brian. But the Prime Minister, Takaichi, she's known to be not really a fan of rate hikes. Will there be any political pushback, you think?
Yeah, so Takaichi, in September of 2024, she famously said that it would be stupid to raise interest rates. That was when she was speaking as a lawmaker. The following month, in October last year, the ruling LDP suffered a huge setback in a national election, lost its majority in the lower house. Same thing happened in July this year with the upper house, another setback, another loss of majority in that house. And that was all really, a lot of the factors there were concerns about cost of living. Voters are really discontent about soaring prices. So Takaichi is aware of that. She's aware of the political costs of letting inflation run. So she's probably not going to push back. She met with Ueda a few weeks ago. They came out of that meeting seemingly on the same page. I would expect her to say something constructive like she expects the BOJ to continue working closely with the government to support the economy. From Ueda's, I'd also expect him to say that even with the hike, policy remains very accommodative, which shows that he's on the same page as the government in terms of stimulating the economy for now.
Brian, thank you. Brian Fowler there, our senior editor, joining us out of Tokyo. Of course, we'll have more analysis when it comes to that BOJ decision that will be happening any moment, any few hours now, really, including the outlook from the former BOJ Assistant Governor Kazuo Moma. Those conversations coming up at the times on your screen. And of course, we're going to recap what happened with that U.S. inflation print, right? Because it was enough to move the market, right? What happened when we saw in this November print? 2.7%. That was below the median estimates here. You take a look at how core CPI, that strips off, of course, the volatile items, that came in at 2.6%, also below median estimates. And people were questioning, why was there such a sort of abrupt, sort of dramatic fall or a cooling of price pressures here? You got to wonder if things are a bit flawed, right? Given the fact that this government shutdown did possibly impact the data quality, especially since some of that October print was partially incorporated into this as that. But certainly there is some questions around whether we need to take this sort of data to face value. But markets were saying enough. This is good enough for me to think that inflation might not be as big of a problem next year as some have suggested. Joining us now is Stephanie Leung, Chief Investment Officer at digital wealth platform StashAway. Stephanie, it's great to have you as we count down to the end of the year. It seems like we're heading into the next year. Yep. We're still pretty positive on the growth outlook, right? We take a lot of stocks. They're still looking pretty constructive. S&P is still within records. Right. Credit spreads are still quite tight. Yep. And it seems like this is going to be a Fed that's going to cut into stability more than, anything worse than that. Is it still the good backdrop, the macro side of things?
Yeah.
So be constructive on risk.
I guess last month or so we put out a piece where we say basically jobs market runs cool, AI runs hot, and the Fed runs loose. And to us, that's sort of like the Goldilocks scenario that you would have for equity markets, given that I think the equity market is looking for a looser kind of liquidity situation to support sort of the AI story to keep going. And I mean, jobs cooling down a little bit actually gives the Fed a lot of room to cut.
Yeah.
I think there was a bit of wobble kind of early in December because the market was worried that the Fed is not going to cut in December. However, I mean, now that the Fed has cut, that sets up like a path for next year for the Fed to continue on that kind of interest rate loosening path. And I think the CPI number was a good kind of indicator that, I mean, the Fed is sort of on the right path. Of course, as we turn a page next year, when we look at kind of what's going to happen to the U.S. economy, we think it's actually going to still stay quite strong or even accelerate. Because if you look at the fiscal spending side, in the first quarter, second quarter next year, U.S. fiscal spending is going to be a very, very big supportive kind of element to drive GDP growth. In fact, if you look at the first quarter, even if Trump doesn't get his $2,000 check go through, still U.S. fiscal policy is going to give like 3 percentage point support to the U.S. economy in terms of GDP. So that's actually very, very strong.
The key question now, whether if risk assets can do well, I mean, with the AI trade, how much of this bullishness has been priced in? Do you think it's time to still double down on AI?
Yeah.
Or is it time to kind of rotate to some of these laggards that we saw this year?
Yeah, I think you've seen a bit of that happening in the past sort of 6 weeks or so. There's a lot of questions about whether we're in an AI bubble. And when we think about AI, we think of, I guess the framework that we use is sort of like a three-part Fisher cycle. Or a virtuous cycle. And you start with kind of tech innovation. Because like all we've seen in terms of AI this year, in the beginning of the year, there was a bit of concern about, are we hitting a plateau in terms of AI model breakthrough, right? DeepSeek came out and there was a lot of question of, I mean, China can actually do it a lot cheaper. However, throughout the year, in the middle of the year, second quarter, third quarter, you've seen a rebound of U.S. AI stocks because we found that actually the models can get a lot better with more compute. So scaling law still continues. That results in the second pillar of the virtuous cycle, which is return on investments. And I think if you look at the Max 7 earnings, they've grown like 30% odds this year and last year. And that shows you that these companies are reaping returns. And then the last pillar is, of course, funding.
Yeah.
And I think that was a lot of concern that market had.
I was going to say, right, when you take a look at something like what happened with Oracle and this news that Blue Owl is not going to be providing equity for just building one data center, and it's enough to spook the market. So how big of a risk is that, the funding of AI?
Yeah, I think the market very, very quickly went from, just having these commitments is great to having these commitments, but not having the money is bad sort of sentiment. And I think that's a valid concern, right? Because it does require a lot of funding, $6 trillion in the next 5 years, and only half of that is funded by the revenues of these hyperscalers. So a lot of that has to come from the debt market and the equity market. And hence, liquidity is so important because, I mean, the moment the Fed says, okay, we're going to put the brakes on stuff, we're going to start hiking interest rates, I think we may see a replay of 2022. Now, of course, so far, I mean, the Fed has been very, very accommodative, and I mean, fiscal policies have been accommodative. So we don't see that pillar breaking yet, but I think that is one big factor to watch for next year.
Stephanie, hold that thought. We'll have more from Stephanie Leung, their Chief Investment Officer at StashAway, staying on in just a few moments as well. Coming up, we're going to have McKinsey joining us to explain why they think the old China strategy playbooks are now obsolete and how businesses and investors should be approaching 2026 when it comes to China. Joe Ngai joins us in just a few moments, and we're counting down the open of trade in Shanghai, Shenzhen, and Hong Kong. This is the China Show. Happy Friday morning. Futures are up. Your PBOC fix here today, a little bit on the weaker side against estimates. We're talking about a 705 handle here, and the estimate was for a 703, but not doing a whole lot here. We're still holding on to that strength that we've seen in, of course, dollar China. We're at 703 levels, still around those 2025 highs there. We're back with Stephanie Leung, Chief Investment Officer at digital wealth platform StashAway. I mean, I take a look at how MSCI China has done this year. I mean, despite this little pullback and the choppiness in December, we're still talking about, north of 20% gains. Yeah. Are we likely to replicate those sort of gains next year for China?
Yeah. I think this year the gains have been mostly valuation re-rating. So, I mean, China went from being uninvestable to today, I mean, people are sort of having some interest, but not yet in. So I think any further gains from here has to come from earnings. And we actually look quite deep into China in our annual outlook for next year. And we actually, in fact, in our title for the outlook, we call it Just the Facts. And that's because we think from last year, we said the title was Fat is the New Normal, where, FAT stands for Fiscal, AI, and Trump, right? This year, we added China into the mix. And that because we think actually next year onwards, China is going to become a very, very important global force. Perhaps not in the sense of, China is going to have a fantastic recovery, but in the sense that, Chinese technology is actually being a leading force in a lot of different areas, including, not just semiconductors, AI, robotics, but also healthcare. And I think the one risk of the AI trade that we mentioned is liquidity, right?
Yeah.
And I think one thing that can upend that is if China sees a much faster recovery, because that actually poses inflation risk for the U.S. And that actually makes it impossible for the Fed to remain accommodative. So we think China is actually a force in technology, but also a kind of area to watch for U.S. inflation risk from next year onwards.
Okay, FACT, I'll remember that.
Yes, just the facts.
Just the facts. How do you think China's position, though, in terms of this whole AI trade, right? I feel like before it was seen as, if global AI, if the North Asia's are going to be quite sensitive to what happens globally to the whole AI trade, China in some ways is still well positioned because of this whole self-sufficiency sort of regime, right? Is that how you approach it, that it's still positioned quite well despite what happens globally?
I think if you think about China, it's pursuing a slightly different type of AI compared to, for example, the U.S. companies, right? China is pursuing AI much more on the application level, whereas the U.S. is pursuing it on a model on an AGI level. So when you pursue AI on an application level, you actually don't need probably most cutting edge chips, right? You need enough chips, enough power to do inferencing.
Yeah.
And that's what China has a lot of, right? China has a lot of power. China can produce actually a lot of chips. Indeed, if you look at some of the forecasts of Huawei, they're going to produce so much chips in China that is probably going to, again, bring in prices.
Yeah.
Because I think that's sort of, I guess if you look across different industries in China, that's sort of what they're pursuing, right? A lot of competition, including price competition to sort of bring things to a more affordable level, but much more applicable to the whole economy. So I think that probably is going to happen to China AI as well.
Okay. BOJ, got to ask you that since it's happening any moment now. Do you see this, the fact that they're, I guess, restarting this sort of hiking cycle? I don't know if you can even see it's restarting, but in terms of the pacing of what we could see, longer term, what do you think that does to investor mindset here?
I think that, BOJ is most probably forced to do it. If you think about Japan inflation, it's now approaching 2 to 3%, and interest rates is still 50 basis points, right? So if you think about the real interest rate is steeply negative. And for them to remain accommodative for so long, it's just not sustainable. So I think they're almost forced into doing it. And it's very, very well telegraphed. And if you look at the yen, it's almost approaching 156. And I think there's a risk that if they don't do it, the yen will weaken dramatically from here. And to test the BOJ's 160 kind of, red line that they've defended a few times in the past, right? So I think there's a tendency for the government as well as for, for investors to sort of push the yen weaker. And I think BOJ has to do it, basically. So if they hike, that's well expected. If they don't, then the yen actually weakens a lot more.
What does it mean for the equity market? Do you think it's been a pretty a standout, not as bright as what we've seen in Korea per se, but Japan has been one of the outperformers.
Exactly, it's been quietly a very, very strong outperformance this year, and we've had an overweight stance on Japanese equities, and it's sort of, I guess, it's played out quietly this year. We think that the story is still live and kicking, right? Japan come out of deflation, and it's a long kind of a multi-year kind of story. The ROE story is still ongoing, and Japan has used its currency historically to sort of support the economy and corporate earnings, and we still think it's a very, very important force going forward. Okay,
favorite asset class or favorite something for next year? What is it still going to be?
Still we prefer equities over safety assets. We still think, at least in the first half, things will actually run quite hot. We think that on the safety asset side, I mean, still gold is our top pick over bonds. I think perhaps, I mean, China is something that we've been thinking a lot about. But so far, we have not seen China coming out of deflation yet. So if, I mean, China PPI and CPI starts to sort of inflect higher, then I think we can get a lot more positive there.
Okay. Stephanie, thank you. Stephanie Leung, Chief Investment Officer at StashAway. Have a great holiday, and I'll see you next year.
You too.
In terms of what we're seeing in the pre-market here today, certainly when we take a look at these trading debuts, that's going to be a key thing to watch. And there you go. Zhihui Mining, 139% gains here right now. Cidi, that's not doing too much here right now, but yes, we're getting used to this, right? These big listing debuts in Greater China. Pre-market is doing this here as we wrap up the trading week as well. So we're focusing, of course, on Zhihui, on Cidi. We're also focusing on some of these TikTok-related stocks. There you go. Pre-market is slightly to the upside here today. This is Bloomberg. All right, here's how your pre-market is looking. It looks like we're doing pretty well when it comes to risk assets here today. HS Check is back up to about 0.8%. 8 shares also closer to that 89,000 sort of 8,900, I should say, level there. 703, still strength in the currency. In terms of analyst actions to tell you about, there's a few that be quite interesting. China Tourism Group, duty-free, getting a more bullish outlook when it comes to UBS. They're raising their price target there by 27%, citing potential for acceleration of its Hainan duty-free sales growth due to the new policy there. Costco shipping 8 shares cut to a sell at Goldman. Nongfu Springs also raised to a buy at HSBC. So there you go. Focusing a little more on the consumer side of things here today. You see Nongfu String is up some 2% in the pre-market. We're watching some of these Nike suppliers and the like. So given what we heard in terms of the outlook there, I mean, really the sales beat was overshadowed by the weakness that they're seeing in the China business. And so certainly that thing one is weighing on some of these Chinese suppliers here as well of Nike. We're also watching these big debuts when it comes to the likes of Cidi. This is the semi-autonomous trucking company. We're going to be talking, of course, to the CEO pretty soon. Zhihui Mining as well. Look at that. We're seeing gains of close to 140% at the first day of trade there. This is, of course, a miner of copper, of zinc here as well. So given what copper prices are doing of late, certainly is a good day when it comes to Zhihui Mining. We're going to have the open coming up next. This is Bloomberg. Welcome back. You're watching the China Show. Live pictures out of Hong Kong Exchange here this morning. And yes, we have several listing debuts here in the city, and certainly everything with an interesting sort of theme, right? Everything that maybe investors are really interested in, whether it's autonomous driving like Cidi, Zhihui Mining. So, you know, this is one of the copper miners out there in China. So certainly a lot for people to kind of gain some more, I think, their teeth into when it comes to these listing debuts as we wrap up a pretty blockbuster year for IPOs in Hong Kong. Best in 4 years. Right? So there you go. Adding 4 more to the list here today. Xiamen UX and China Prologis Warehousing here. So 4 gongs on the stage, and certainly we'll be speaking with the Cidi CEO with an exclusive chat pretty soon here. He's going to be coming through on stage and the Hong Kong Exchange and coming straight here to the studio. And there you go. The banging of the gongs, plural. Yes, that's what it is.
祝贺西迪之家以及智慧矿业在香港交易所主板成功上市。
All right, there you go. It certainly is. We're just counting down a few more weeks into the end of the year, so certainly we'll see. Hong Kong looks still set to be on track to be number 1 in terms of the IPO market. We'll see if we get there, right? But certainly that is going to be the thing to watch. Cidi there is pretty much flat right now, but there you go. Zhihui Mining, 135% gains here. And Xiamen UX, 350 gains here. This is, of course, a Chinese chip maker. So following the optimism that we saw when it came to Meta X, more threads here the last couple of weeks. So certainly there still is a lot of optimism around sort of the hardware side of things in China and this whole sort of AI story, right? So that certainly is going to be one thing to watch. China Prologis warehousing, though, that's slightly down by 4%. In terms of the rest of the markets, is what we're seeing on this Friday morning. So obviously the overnight session and what we're seeing in Asia is optimism around, of course, that U.S. CPI print, which was a little bit softer than expected. So that reinforced, more of the Fed doves out there that perhaps the Fed can continue on cutting next year. So that's enough for stocks to be bid. The AI trade, the tech plays, S&P is, I think, 2% away from all-time highs as well. But right now we're pretty flat on the onshore market. CSI 300 is pretty much around that 4,500 level as well. Not seeing a whole lot of conviction. In fact, CATL shares, you're seeing gains about close to 1%, but that's about it. Guizhou Maotai heading the opposite direction. There's not a whole lot of catalysts as we count down, of course, to China for now. Hong Kong is looking like this. So obviously we've been talking a little bit more about what the A-share sentiment is going to be. It's interesting. Morgan Stanley's Laura Wang did talk about A-shares might actually likely stay range-bound given the external uncertainties out there and still challenging domestic macro, even if sentiment was boosted by higher turnover. They were talking about some of the turnover in ETFs that were linked to maybe the national team just earlier this week. But yes, Hong Kong's looking a little bit better. HS Tech is catching a bit here, and we are seeing gains when it comes to Alibaba. Baidu, Meituan is up 1.5% here today. Nike suppliers, that's the one to watch, just given what we've been seeing, the slowdown they're seeing in China, despite the fact that the revenue side of things was actually a beat for the market. But they're projecting a sales decline in the current quarter. So there you go. Some of these Chinese suppliers are not doing too well here today. And again, the TikTok-related stocks that we're watching very closely, given the fact that we heard from the company itself saying that they have reached a U.S. joint venture, which does include tech companies like Oracle. So certainly that's going to be a key focus here. We're seeing some of these TikTok-related stocks that are gaining. All right, we've seen a remarkable turnaround when it comes to Chinese equity markets this year, triggered really by this whole DeepSeek surprise, and that's really despite this uncertain macro and geopolitical backdrop for the country's economic recovery. Joining us now for more on this, what the business landscape is like, what sentiment is like in China, McKinsey Greater China Chairman Joe Ngai. He's also going to be a co-author of the upcoming book, The Next China is Still China, an insider's playbook for winning in the new era, set to come out next year. Joe Ngai, thank you so much for coming on to the studio here. I want you to explain the title a little bit. The Next China is Still China. What does that mean?
Well, first of all, thank you for having me. I think The Next China is Still China, the title really comes from the fact that just about a year or 2 years ago, people were wondering, where is the next China?
Yeah.
Is the next China India? Is the next China Vietnam? Is the next China Indonesia? And I think, from a scale, relevance, and to be honest, just significance to the world, our view is the next China is still only going to be China. There's nothing like that in the world. However, the book doesn't talk only about that. It is a more challenging China. It's a more challenging global world. We have technology, we have geopolitics, we have many things changing. So therefore, what do we need to do to prosper in this next China? That's what the book's about.
What's the new playbook then?
Oh, there are many things in that. You have to kind of buy it next June when it comes out.
I will. You got to give me a copy.
It is really going to be around, I think that we went from a lifting, a rising tide lifts all boats into something that we feel is going to be much more disparity among the people who can actually make it happen, more granular, more, being the right swim lanes. I think there's an old China that's actually not growing and, to be honest, quite struggling. And there's a little bit of the newer China, which is the part that we're very excited about. And I think it's very important that you're playing the right spots with the right channels, right technology. That's going to be the game in the future.
And you mentioned it still has its challenges, right? When you talk about youth unemployment, that is still quite high. When you talk about this whole kind of involution on the ground here, to what extent do you think that's going to derail some of the ambitions that China has on some of the things that you mentioned that are so exciting?
On a micro level, every day, every single business in China are fighting for their life. Okay, we can have this growth of 5%, we can have 30% of global economic growth. That doesn't mean that on the ground, that entrepreneur, that business, that multinational is having it easy. I think that the oversupply situation, I think that there is, AI is coming, so that's also causing some uncertainty around jobs. That's all there. Property, right? I mean, there's enough about that as well. Local provinces, finances, right? There's also a lot of debt in there. So I think all these are not going away. And by the way, these all take time to digest. So what you're going to have is going to have a kind of macro shift that's going on. But in there are many, many players who are fighting for survival. And that fight will not get easier by any means.
The export sort of dominance that China has had, do you expect that to in any way slow down next year? Or this competitive moat that they have, that's going to be still their, I guess, wild card, I would say, for China.
I think
right?
on the overall basis, I think that the industrial capabilities that they've built, particularly on supply chain, right? I think that the speed of how that moves, I think that the resilience of that. I mean, look, this year, 2025, has to be the most uncertain year ever, right? In the beginning of the year, we have like tariffs, we have all these things that people are not sure where that's going to land. We end up having a record year of China's exports. That's now 16% of the world exports, and by the way, that actually is a record high, right? So if you think about next year, now we have tariffs, calming down. We know what that's going to look like. I think that we have the capabilities already built. I think that it's hard to stop that train from going. But remember, in there, it's not one player, right? I mean, there are many, many players in there, and they're all trying to find export markets. By the way, this year, the Chinese companies going global, trying to find markets in the South-South trade. I have so many more clients this year going to the Middle East, going to LATAM, right? Going to Africa, going to ASEAN. Right now, remember, I mean, America is only 2 to 3% of Chinese global GDP on the export side. So I think that that side still has lots of room, because what we see this year is only the beginning of what I think is a much more pervasive globalization of Chinese companies who are trying to search for other markets than just the traditional West.
But there are overcapacity concerns too, right?
Absolutely.
Has that in any way impacted where the investment side of things, right? We still see investment on the decline in China as well. Why do you think that is?
I hope that is the beginning of the capacity being, a bit more, tempering off a little bit, right? I mean, a lot of capacity came in the 21, 22, 23. That's when the height of all the investments and capacity came in.
Yeah.
I think in the last 2 years, if you look at actually capex in China, whether it's like foreign direct investment or local private enterprise on the investment side, it actually has been very, very low.
Yeah.
And so that also gives you the sense of the Chinese entrepreneur is not putting on more capacity. And so give it another 2-3 years, I think that overcapacity will slowly, hopefully, taper down a little bit.
And this, I feel like 2025 was the year that China proved that they are on par with the US when it comes to AI and open source language models. What do you think 2026 is going to look like? Is it going to be more about application?
Yeah.
And what really excites you about that?
I think if you think about 2025, right, I think that DeepSeek came out in January. I think that, do I say that China AI is on par with the US? I think that the US will still lead in many of, the numbers we're seeing, right, whether the valuations, whether it's going to be around the investments we're putting in. I mean, the US is still, from an investment perspective, right, I mean, I think, multiples of what the China investment is inside. However, I think that what the Chinese have proven this year, especially these local private companies, right? These are the DeepSeek, the Alis, right? The ByteDances. I think they have proven that their resilience in the game, right? If you think about the large language models in the world today, over half of them are actually Chinese, and by the way, they're all open source. So I think that what is very interesting is that if the Chinese models are, let's say, 80%, 90%, 95% of what the top US models can do, then I think what you have to go is to go downstream on what's that going to do to corporates, what's that going to do to economic productivity.
Yeah.
So I do think that diffusion, I do think the applications will be the next layer of growth that we can see. Because I think the LLM game will be played out by these big players. I think that game is pretty much done at this stage.
And I think as everyone tries to see how AI is just disrupting, or at least how trade tensions are fueling this whole sort of AI tech rivalry, I think McKinsey itself as a business in China, I mean, you guys internally are dealing with, I feel like, a bit of a identity sort of questions, right? I mean, there are some questions about your presence in China and whether McKinsey should stay as an international firm. Where do you stand on this? Where does McKinsey fit in China, do you think, now?
I'm not sure that's actually the question. I think that we are quite sure that and our clients want us to be in China. I think that China is very much part of the global economy, right? And our clients have so many linkages with China, right? So right now in China, multinationals are half, or 40% of our business, and local companies are 50% of our business, right? So in many ways, I think that we are very much sure that we want to be in China. The question is technology, is AI, is all these things, how is that going to impact the way how we serve our clients? And I think that's where every single of our clients and us, consultants, are thinking around, what does that AI mean for us? And how do we leverage that in the way that can serve our clients better? I think that's actually much more of the quite uncertainty or the areas that we are trying to kind of figure out what's the right model, rather than, to be honest, like, are we going to be in China or not? That, as we said, the next China is still China. Like, we'll be here.
But Beijing itself has discouraged, I think, companies of using foreign consultancy firms versus homegrown ones, right? Even in the U.S., they've, in some ways, accused McKinsey of engaging with China and helping with their industrial ambitions in some ways, right? I mean, is there a limit to the scope of work that you can do in China? I mean, can you work with SOEs, for example? Can you work with sensitive technologies like AI?
Yeah. China is a very big economy, right? So there are many places where we think that we can have a lot of value add.
Okay.
In some ways, if you think about this year, we're very much invited. And by the way, we have a lot of multinationals invited to some of the top meetings in China, where they said that, look, multinationals have a role to play in China. The Chinese government and the premier and everyone else have said many times with foreign CEOs this year that this year is a record year of number of foreign CEOs coming to China, right? And the reception they're having, the messages they're getting is that you're very much welcome in China, and you have to, play your part in China. Now, Are there areas where self-sufficiency, are there areas where it's sensitive, are there areas where it would likely be more of a local play? Absolutely, right? But given that this is, a third of global growth, I think for most multinationals, I think this is still a very big priority for them, and us included.
You mentioned about AI and how it's disrupting business. How do you see it changing McKinsey in any way?
I think for all businesses, it is changing. For us, I think that we internally have our own AI initiatives, right? One is called Lily. That's
your bot.
Our bot, it's no longer only a bot, right? It's an agent. I think that we have now, I want to say, like 20,000 of agents out there helping our colleagues do all kind of work. What we think that originally what may take maybe 2-3 weeks of work now could be day one, right? I'm going to a client in the first meeting, and I'm armed already with, used to be a week 2, week 3 insights when we start. I think that is a game changer. I think that can help accelerate how we have impact for our clients. That can help impact a little bit how how clients will use consultants. I think before it was a little bit of the information arbitrage, right? I think that right now it's really going to be around impact, around can you do it? Can you help accelerate what we're doing? And I think that is going to change the way how all consultants in our industry has to work.
Our sources have told us that McKinsey is planning maybe more job cuts. They're talking about maybe 10% of non-client facing roles that could impact thousands of jobs. Is that coming to China in any way in your side of the business?
I think, like all businesses, right, there are many sides where AI and technology will be impacting. I think we're reviewing that. We call it rewiring the organization. We are doing it ourselves. In China, I think that we have about 1,100 employees in China, right? I think that right now we feel like we're in a good place. But I think that as we continue to use AI leverage technology, I think that we need to be continuously reviewing what we're doing. And I think that we're telling that to our clients, and we're doing that to ourselves, and I think that that's going to be how the world.
Are you still hiring then in China?
We are absolutely hiring, and if you have good college graduates or MBA graduates,
I will
we are
let you
happy
know.
to take them.
Last question: in terms of your wish list for China next year, what would that be, Joe?
I think 2025 was a year of, I think, the most uncertainty that most entrepreneurs felt at the beginning of the year. We ended the year actually in as good a place as we could have hoped for.
Sure.
In 2026, I think we know the downside. I think we know how resilient the the economy is as well. So in many ways, my wish for 2026 is let's bring back the spirit, the positive energy. I think that we have been lying flat, tamping our entrepreneurs for a few years now. Everyone's like, wait and see. No more waiting and seeing, right? You know how bad it could be.
Yeah.
Now it's time to get going again.
Time to get to work. All right, Joe, it's great to have you. Thank you so much. Joe Ngai, chairman at McKinsey Greater China, of course, and author of his upcoming book. Make sure to check it out. Next year, the next China is still China. An insider's playbook for winning in the new era. Later on the show, we're going to be speaking with the Chinese autonomous vehicle maker Cidi as they make their trading debut in Hong Kong after a $183 million IPO. Our exclusive with the CEO Albert Sibo Hu coming up in the next hour. This is Bloomberg. All right, we are keeping an eye out on, of course, the Chinese suppliers of Nike. The U.S. company shares plunged after the bell with its quarterly earnings report, revealing further weakness in China and in its Converse brand. Let's bring in our senior analyst for Bloomberg Intelligence, Catherine Lim, joining us now. We saw the Nike shares really plummet after hours after that outlook, despite the sales beat. Tell us what's really going on in China there.
Right. Well, the sales bid was for the company on a global basis. Yvonne, looking at China, sales missed, profits missed, margin fall was steeper than expected. And really, they admitted that they now need more time to try and get things together. And the way I see it, it is reviving the brand heat in China, whereby we are now seeing so much competition, notwithstanding. Consumers there now are more discerning in their spending.
And what can they do to really kind of turn around this brand now? I mean, you talk about how we talked about on the show about these kind of growing Chinese domestic brands like the athleisures, the Li-Nings, and the like that seem to be really kind of eating up the market share there.
Yeah, I guess, it's not just the domestic brands, Yvonne. We're looking even at Irma Sports, whether it's Solomon, whether it's the pricey Arc'teryx, as well as the North Face. It is a different category of sports altogether, whereby consumers are now looking for more specialized items, athletic gears. Specific enough, it's positioned for outdoor sports. Athleisure, yoga, Pilates, and Lululemon is actually doing fairly well in China, chasing after a market whereby it is still fairly under-penetrated, and that's why you're actually seeing stronger growth for Lululemon, whereas on Nike, on the other hand, they need to just rejig where the brand is being positioned right now versus what they've done in the past about just being purely lifestyle and then aspirational.
And in terms of pricing, I mean, do you think that they're going to have to, give out discounts? I mean, what is it that's going to be needed here in terms of the strategy moving forward?
Yeah, they've spelled it out that they're going to be more aggressive in their clearance in China. And admittedly, that does mean that, they do actually have to do more promotions to actually get some of those aged inventories out. And looking at the wholesale numbers per se, it does look like, the promotions will come through in the first half of 2026, even stretching beyond summer. So we'll probably only see more of the new Nike products making a splash if they are successful in the second half and later part of 2026.
All right, Catherine Lim there, our Bloomberg Intelligence Senior Analyst. Thank you. If you are a subscriber and want to rewatch that interview, you can, of course, watch through our interactive TV function, TV Go. You can also become part of the conversation by sending us instant messages. Check it out at TV Go. This is Bloomberg. Here's some big corporate stories that we're following for you today. UBS closed higher in Switzerland after sources told Bloomberg the bank will begin a new wave of job cuts in mid-January. We're told another round of cuts will follow later in 2026 as UBS switches off computer systems it acquired when it took over Credit Suisse. The bank is entering the final year of integration with its former rival, which it bought in 2023. And shares of Trump Media jumped in the U.S. after the firm announced it will merge with fusion power developer TAE Technologies in a transaction valued at more than $6 billion. The combined company plans to begin construction next year on the world's first utility-scale fusion power plant. Trump Media is the company behind Truth Social. And now for another check on the markets. And yeah, we're watching these two listing debuts very closely here. So Zihang Zhihui Mining, as well as Xiamen UX. Explosive gains here at the first day of trade. So one is in the Hong Kong market, the Zhihui Mining, and they are, of course, a miner of copper and zinc and the like. They're 120% gains here, so certainly a great day. And Xiamen UX, we're talking about another chip maker listed onshore. We're 360% gains and really following the whole upbeat sort of look that we had in the chip makers with Meta X and more threads in the past few days and weeks as well. The rest of the markets are doing this right now, of course, as we count down to the end of the week. Chinex is kind of still doing quite well in the face of all this. We're pretty slow going when it comes to CSI 300. Hang Seng catching a slight bit. It's pretty quiet out there, but it really is going to be about the BOJ in the next hour or so here. So this is what Japan assets are doing. We're still seeing gains of 1%. Dollar yen still looking on the softer side of things here. So we'll see. This rate hike is all but a done deal. And that sticky inflation print that we got this morning certainly did reinforce that as well. But it's really going to be that presser with Ueda in terms of the guidance moving forward and the hike path as well. You're watching the China Show. Welcome back to the China Show. Here's a look at the HSI half hour into the session here. And yeah, it's quiet. It's Friday, but at least we're doing quite well. We're up about 1/5 when it comes to 8 shares here today. So still looking okay. It's given what we saw when it comes to the U.S. inflation print, that certainly did help risk assets here today. The fact that it was much softer than expected. So that certainly did lift stocks, bonds as well, treasury markets, and certainly we'll be focusing on that. But really, we're shifting gears to the BOJ, which could be making their policy decision any sort of minute or second or even hour now. So certainly that's going to be the case here today. We are following some breaking news when it comes to the Ukraine. So we are hearing, and there's confirmed now, that the EU is going to be giving a 90 billion euro loan to Ukraine for 2026 and 2027. So we were talking a little bit more just before this confirmation that this was going to be some sort of joint debt to loan as much as that amount there. And so certainly there's going to be a lot of pressure from EU leaders here to agree to a loan at the summit in Brussels as well. So Ukraine likely to run out of money in the spring without these fresh funds. So it looks like right now they have secured that funding for next year. All right, well, we'll continue to bring you more headlines once we get more on the details of that story. But in the meantime, let's get you caught up with what markets are doing here. We're pretty flat right now when it comes to the dollar, but certainly we're focusing very closely on what happens with the BOJ and how that changes things in some ways, right? Because the yen is already weakening. It seems like this rate hike has been pretty much priced in. But you are seeing, a slight bit when it comes to euro, when it comes to the sterling. With the sterling, really, the BOE suggesting they have limited room to keep cutting. And it was really similar sort of commentary from Christine Lagarde, who did remain quite hawkish despite holding rates as well. So that's something that we're contending with as well. And does that keep the dollar soft for next year is a key question. You take a look when it comes to Japan assets. It's still looking pretty good when it comes to Japan. Nikkei 225, we've been seeing punching higher here. We're up more than 1%. Topics is also 0.75% to the upside. But the yen is already weakening, as I say. So I think Mizuho was the one, is if we see some sort of dovish hike from the BOJ here today, we could start seeing dollar yen head higher. He says 158 levels could be something that we could see. And JGB yields on the 10-year are up 1 basis point, getting closer back to that 2% level that was hit just recently as well. So there you go. That's our top story here today, and we're waiting, of course, with anticipation. Finally, this day is here on the BOJ, and really, set to raise that rate to the highest level in 3 decades, as we see a growing sign of confidence now that the inflation outlook is more stable. Let's get to Tokyo and Taro Kimura, Japan economist at Bloomberg Economics, and also spent a lot of time at the BOJ. Let's start with that inflation print that we got when it came to November. It still looked like things are pretty sticky. What's your take?
Right. November CPI, the core CPI held steady at 3.0%, which is way above the BOJ's 2%. And important thing to note that last year in the same timing, it rose by 0.4 percentage point. That means keeping the same pace this year is the Japan's inflation is keeping the same hot momentum as we did last year, even though the oil price is decreasing and BOJ is tightening, and that's a strong signal for the Bank of Japan that the prices remain sticky. BOJ can still argue that there's still a mix of supply side factors that the central bank doesn't have to deal with, and that can make a balance between the pro-stimulus government and cautious BOJ tightening. That said, the data still suggests the Bank of Japan still far more ways to normalize its policy by lifting rates.
Yeah, I mean, does it make today pretty much a done deal, though, at least for this hike? You know, what sort of implications are you seeing for today's policy decision?
Right. I think the BOJ's real intention, besides all the wishy-washy with the relationship with the government, is the inflation is hot, the real estate prices or other risk asset prices are climbing, even though the BOJ is normalizing. So I think Ueda and his team wants to tighten as fast as it can. And I think the today's hot CPI print is the factor that gives some conviction for the Prime Minister, a pro-stimulus Prime Minister Takaichi, that her potential intervention for the monetary policy is risky, that it could fuel further cost of living squeeze. So I think the green light from the government is backed by the hot CPI print today, and surely the BOJ will argue the hot prices today.
Yeah, and tell us a little more. I mean, you've worked at the BOJ. When it comes to the messaging, right? I mean, I think this rate hike is pretty much guaranteed. But in the Ueda presser, what do you think is going to be most important to see in terms of signals for next year?
Right. I think markets are waiting for any signals from the neutral rates, which the Bank of Japan is communicating. It's somewhere between in a broad range of 1% to 2.5%. But at this moment, the 1% is the eye on the market. And if the BOJ raise to 0.75% today, it means just one step away from the neutral rate band. And I think the important signal from Ueda is the wording of how he will describe his policy rates. Now the BOJ officially calls the rates as significantly low, but with the 0.7% and neutral rate 1%, BOJ can't say that anymore. So if there's any tweak, or I would say if there's no change in the wording, that would mean the BOJ is lifting the neutral rates and calling their lifted policy rates still significantly low. So the wording, any wording on how Ueda will describe the lifted policy rate should be in cautious watch.
Tara, thank you. Tara Kimura, Japan economist at Bloomberg Economics, joining us in Tokyo. He's going to be busy for the next few hours. And of course, you'll have all the analysis you need right here on the Bank of Japan decision. Ahead this hour, we'll be speaking with Brandywine Global. Carol Lai joins us there, of course, as we get that decision, if we do, during this hour. And later on, we're going to get the outlook from the former BOJ Assistant Governor, Kazuo Moma, joining us at Insight. Coming up on the China Show, though, our exclusive interview with Chinese hard tech company Cidi as they make their trading debut in Hong Kong this morning. This is Bloomberg. All right, we are looking at some of these TikTok-related stocks in China, not doing a whole lot, but still going to the upside here today. After what we've heard, TikTok says it has signed deals to create a U.S. joint venture, majority-owned by American investors. An internal memo from the CEO, Sibo Hu, tells that employees that agreements have been made with Oracle, Silver Lake, and MGX. Let's bring in our Global Tech Senior Executive Editor, Tom Giles. He joins us now with the latest. Tom, what do we know at this point and what's new?
Yeah, well, this is a big day for TikTok and its owners. We finally have gotten some clarity on what the new ownership structure will look like here in the U.S. As you know well, and as we've talked about lots, the U.S. was really worried about this widely used app here and it being owned by a Chinese parent. So that process has been underway for a very long time. It's often been delayed and kicked down the road. We finally have some clarity on it. We're going to have some new owners led by Oracle, MGX, which is a Middle Eastern sovereign wealth fund, and Silver Lake, the private equity firm, as well as existing owners. And then China will have a minority stake. So this is really aimed at allaying U.S. concerns about national security, and it just brings some certainty and some clarity to TikTok's new owners and TikTok users who were, there was a time here in the U.S. where it is widely used, where it wasn't clear whether this was going to be shut down altogether, which would have caused a lot of consternation for a lot of users of TikTok.
Yeah, you mentioned that ByteDance might get a stake in this. Can you tell us a bit more about the role that's going to have? And China really hasn't put his opinion on this current sort of structure, right? Is this likely going to appease them?
Well, I don't think you could have gotten to this place without China's approval. We are definitely looking to understand what the Chinese government may say about this. And we certainly will report anything that we hear, any inklings that we get, any hints on what they have to say. My sense is that Shou Chu, the CEO, would not have put out this statement, would not have shared this internally if they hadn't gotten China's sign-off on it. Our understanding has been, and what we've reported, is that this deal could not be finalized until and unless the Chinese government signed off on it. But yeah, ByteDance, the Chinese parent, will have 20% of the company. That's the ownership stake that they will have. So they will still have a hand in the company, but clearly not the majority control. Again, which is what U.S. Officials had been so concerned about for so long.
Tom, great to have you. Thanks so much for your analysis there. Tom Giles joining us out of San Francisco on TikTok. And it seems like we are moving in one step forward here when it comes to what this whole JV is going to look like as well. We're also looking at trade relations between D.C. and Beijing. Some key stories have come out in the last 12 hours or so. China's shipments of rare earth products rose 13% in November from the month before, and that's restoring the flow of critical minerals used in EVs, weapons, and high-tech manufacturing. That's according to official customs data and Bloomberg calculations. And there's more progress in the ag sector as well. Bloomberg has also learned that China has secured at least 7 million tons of U.S. soybeans after heavy buying in the past 2 weeks. So that's past the halfway mark towards meeting its 12 million ton purchase agreement with the Trump administration that was reached, of course, in Korea. But then again, there's also this story. A U.S. plan to sell $11 billion of arms to Taiwan has drawn strong criticism from China. The package announced on Thursday would include missiles and artillery systems.
The U.S. attempt to support the secession by arming Taiwan will only backfire, and scheme of using the Taiwan question to contain China will never succeed. The Taiwan question concerns the very core of China's core interests and is the first red line that must not be crossed in China-U.S. relations.
Let's bring in our China government and economy reporter, Lucy Liu. She joins us now from Beijing. Beyond just the headline, I think it's also just how much they're buying, right? $11 billion is quite a large number. What does this mean for the whole U.S.-China trade truce now? Could this deal potentially derail that truce?
Absolutely. I mean, 11 billion is one of the largest sales that the U.S. has announced to Taiwan. But actually, for the trade truce, though, we do have to remember that these deals take a long time to materialize. So we don't know how long they've been talking about this. And of course, the timing of it does come sort of nearly 2 months after that big truce in Busan. However, as we know, this is sort of a reoccurring theme in the U.S.-Taiwan relationship. They've continued to sell arms. There are these big announcements. Obviously, it takes a long time for the deals to be completed. So it's certainly a new risk factor for the relationship, but so far we haven't seen an indication that Beijing is going to, this deal will just fall apart because of this. Yesterday at the Foreign Ministry, they did sort of pledge that, China will take very strong measures to protect its own sovereignty, and of course, repeating that Taiwan is really at the core of its core interests. So certainly, an important factor in the relationship, but for the moment, I don't think we're seeing this derail that trade truce.
Yeah, the State Department said this was just sort of a routine case, as they call it. What are some of the analysts that you talk to say about this package now?
Yeah, so the package of that has been announced, it doesn't actually contain weaponry that hasn't been sold to Taiwan before. There is sort of this new communication system, but basically analysts are saying this is continuity. It's continuity perhaps with sharper edges. Obviously, the timing is not great for that trade truce, but ultimately, it's not a huge escalation, we even have analysts saying that this may not be as escalatory because if you announce this big package, then at least you're not announcing, every few months a new arms sales to Taiwan, which, which given how fragile the relationship is, could then, throw a wrench in sort of the stability at the moment. So, as far as we've seen, I think what it does show, though, is, anyone that's saying that Trump has given up on Taiwan or is giving away Taiwan, those analysts, I think, given this latest news, we'll have to kind of reevaluate. But, we did have that reporting earlier in the year that China was pushing the U.S. to say that it would oppose Taiwan independence. So certainly it looks like the U.S. Is sort of more, it's more continuity than any major breaks from its Taiwan policy.
Lucille, thank you, Lucille, joining us out of Beijing with the latest there. And now to some other big political stories that we're following. Canadian Prime Minister Mark Carney says a deal to lower U.S. tariffs on sectors such as steel and aluminum is unlikely in the near term. Instead, those talks may be rolled into broader negotiations around next year's review of the U.S.-Canada-Mexico trade agreement. Canada has been hit particularly hard by the tariffs due to its reliance on the U.S. export market. Chinese Foreign Minister Wang Yi has expressed support for Venezuela after President Trump's oil tanker blockade. Wang told his Venezuelan counterpart Beijing opposes unilateral bullying and supports countries safeguarding their sovereignty. The comments come less than a day after Trump's latest escalation in the U.S. campaign to oust Venezuela's leader, Nicolas Maduro. President Trump has signed an executive order moving cannabis into a less restrictive federal category in a potential major shift to the legal and commercial landscape for the plant. The order instructs the Justice Department to move cannabis to Schedule 3 for drugs with accepted medical uses and lower abuse potential. Marijuana is currently in the highest class alongside heroin and LSD.
I want to emphasize that the order I am about to sign is not the legalization, or it doesn't legalize marijuana in any way, shape, or form, and in no way sanctions its use as a recreational drug. It has nothing to do with it.
Of course, if you're a subscriber and want to rewatch our interviews or hits and all the like, you can watch through our interactive TV function, TV Go. You can also become part of the conversation by sending us instant messages or guest questions as well. Check it out at TV Go. This is Bloomberg. All right, we're still watching the BOJ any minute, any moment now. And yeah, risk assets are all still catching a bit here this morning in Japan. And in fact, if you take a look at when it comes to the timing, we've crunched the numbers. History tells us that we could see a decision around 12:30 p.m. This is, of course, Japan time. So maybe about an hour or so from now here. This is according to what we've been seeing here. But yes, on average, since Ueda became governor in 2023, the average decision time has been 12:18 Tokyo time. So just some numbers to throw out there as well in terms of what we're thinking in terms of the timing side of things here as well. Staying with, of course, rate decisions as well. We did have the ECB, we also the BOE that made decisions last night as well, with the ECB really leaving policy unchanged for a fourth straight meeting with inflation in the region hovering around target, right? We heard from Christine Lagarde, the ECB president, who spoke after the decision.
The economy has been resilient. It grew by 0.3% in the third quarter, mainly reflecting stronger consumption and investment. The pattern of services-led growth is likely to continue in the near term.
That sort of hawkish commentary we certainly heard from the BOE as well. The Bank of England lowered rates to a 3-year low in a narrow vote. The governor, Andrew Bailey, told us room for further moves next year, though, is limited, and the central bank will face closer calls on its decisions.
Well, I've been very encouraged by the progress that we've made on inflation. I've been saying for some time that we had this, what we called hump up this year. I thought it was going to come down. And it has. And the good news is it's actually coming down a bit faster than I think we thought it would. I'm particularly pleased because there's been an easing of food price inflation, which is really very important. I mean, all inflation is important, but we know that food is salient. It's very salient, and of course it hits those on lower incomes a lot as well. I think now that we're on a path where we'll probably be around this level for a few months, but we think that come the spring, April, May time, we should see another quite sharp drop and take us, I hope, to around target. So we're going to come back to target sooner than we thought. So that's encouraging. All of this is very encouraging. And for me, certainly, it was a strong basis to cut today. It's the sixth cut we've made. Now, looking forwards, I do think we'll continue to have something of a gradual downward path. We'll have to judge the evidence, as you know, at every meeting. We'll come back for the meeting at the end of January, early February, and do that. The calls do get closer, but because as we come down, we will approach a level which is going to sort of, in a sense, maintain inflation. It's not going to be too hot or too cold, if you like to borrow that phraseology. It's very hard to know exactly where that level is, but we will approach it. We're approaching that level. We must be approaching that level in a sense mathematically. So the calls will become closer, and I would expect the pace of cuts therefore to ease off at some point. But I'm not going to judge exactly when that is because it's too uncertain at the moment.
That was the BOE Governor, Andrew Bailey there. I just want to recap the story that we've been following here, that breaking news that we saw when it came to the EU, and leaders there meeting in Brussels have agreed to a $106 billion loan to Ukraine. The funding will be delivered using joint debt rather than frozen Russian central bank assets. And that was sort of one of the key focuses here, where they would do that. So that is a big focus and shift there. Leaders were under growing pressure to agree to the massive loan after months of talks. And the plan has drawn skepticism from the Czech Republic, from Hungary and Slovakia. The German Chancellor Friedrich Merz has called the outcome a great success. All right, we're checking markets here, of course, in terms of movers in China. The drone stocks are something that we're focusing on, just given what we've been seeing. So we're nearing this decision in the U.S. For the Trump administration to decide on the potential security threat poised by drone maker DJI Technologies. So you're seeing some of these drone stocks are slightly higher here today, but this was based on an executive order in June when they talked about the foreign control or exploitation of some of the America's drone supply chain as well. In terms of trading debuts, some pretty big moves here when it came to these listing ceremonies and what we've been seeing debuts here. So Zhihui Mining as well as Xiamen UX. So Zhihui Mining is a copper miner and zinc miner and the like, still seeing triple-digit gains, but we've come off a little bit. Also, when it came to Xiamen UX, 350% gains onshore here today as well. They're a chip maker in China. All right, Taylor, when it comes to broader markets here today, it seems like we're still trying to end the week possibly on a better note. There you go. We're up 0.7% onshore. Hang Seng is also seeing 156 points to the upside here today. And yeah, it still seems like Shenzhen is the favorite here. Chinex is up another 1% here. In terms of how the rest of Asian markets are doing as well, we're still counting down to the BOJ. That could be happening any minute now as well. But yeah, it seems to be largely priced in what the BOJ is going to do. And I think that inflation print that came out for November solidified those rate hike bets. But it's really going to be about the guidance that we're seeing from Ueda in the press briefing in the afternoon. That's really going to dictate where yen's going to go, I believe. This is Bloomberg. $11:29 a.m. in Tokyo. Japanese markets are heading to that lunch break in just a moment. And yeah, it's all about the BOJ, right? We're right outside the BOJ here right now. It seems largely expected that they're going to hike rates here today, the highest we've seen in 3 decades. So certainly that's going to be one thing. The inflation print, that certainly is one thing. Wages has certainly led to that direction. Of course, the weakness of the currency seems to be what has come to this decision here today. We'll watch what the votes are going to look like as well. The T-Live is already up and running. They're talking about the fact that last meeting there were, I think, 2 BOJ officials that were hoping for a hike. Now it seems like we'll see if there's more of that consensus here right now. What does that mean for 2026? Yes, we're still seeing Nikkei 225 up about 1% here. Asia is doing this. We're still kind of benefiting from the tailwinds that we saw from that US CPI print overnight. Flawed or not, it was enough for the doves to be like, yes, the Fed can actually cut more, possibly next year. Didn't really move the needle in terms of Fed rate expectations for next year, but at least in terms of sentiment, it did help. So stocks are a bit up. The tech plays are up. U.S. futures are flat here this morning, but yeah, we're not seeing much movement in the U.S. dollar as well. We have to talk about a few listing debuts that happened here today. And we're talking about Cidi. This is the Chinese autonomous driving tech firm making their trading debut here in Hong Kong, one of few. Shares are down to some 14% here right now. Joining us now is the Cidi Executive Director and CEO, Albert Sibo Hu. Albert, thank you so much for joining us. First and foremost, tell us a bit more about the company. Hard tech in this whole autonomous industry. What does that mean?
So, we are a commercial vehicle autonomous driving firm. So we think commercial vehicles are at the center of autonomous driving and not at the periphery. We work on the software and hardware as well as driverless vehicles that make logistics, especially in areas like mining, heavy trucks, and railway, safer and more efficient.
Yeah, the specializing in autonomous vehicles in mining, used in mining, how big is that demand picture now?
Yeah, the addressable market just in the mainland is a 550 billion RMB market for driverless mining operations, hardware sales, and vehicle sales, and so on. China is a major mining power in coal mines, cement, aggregates, quarries, iron ore, non-ferrous metals, and safety is the principal concern in these verticals. And so this is where intelligent driving and firms like solutions by companies like Cidi can make a real difference in how these industries operate.
Tell us about the timing of this IPO. Why now? And what are you going to be doing with the proceeds?
Yeah, so we are the 7th company, I believe, to list under the Hong Kong Stock Exchange's new 18C specialist technology listing rules. And this is a fantastic new set of rules, allows high-tech companies like Cidi to access the equity markets in some of these exciting new spaces, helps us expose ourselves in terms of visibility of our business to a wider audience. Especially for commercial vehicles, this is not really a space that retail investors might be that familiar with. This is a very professional, specialized industry or set of industries. The vehicles tend to be very large, very dangerous, And so these are some of the places we think we want to make a difference in.
Yeah, I mean, this technology, can you apply it to other sectors as well? I mean, take a look at autonomous trucking, for example, or last mile delivery, or even robo-taxis. Do you have plans on that front, Albert?
Yeah, so Cidi we aren't really in the robo-taxi space or in the public road vehicles. For our fully driverless level 4, we operate mainly in the restricted and closed scenarios, such as mining, such as in industrial parks, factories, customs borders, anywhere where it kind of really makes sense to take the driver out of the loop to radically increase the safety of these kinds of scenarios. That's kind of it's kind of where we want to make a difference.
Do you have any plans to expand globally? We talk about all these Chinese companies that are looking to overseas now.
Yes. So we are expanding rapidly in the MENA region, Australia, South America. So there's lots of demand for mining, very kind of expensive labor, especially in these sectors. And kind of the real pain point is safety. Because mining has 1% of the world's labor force, but 8% of the world's fatal industrial accidents. And this is kind of a pain point where driverless isn't just a nice to have. It can help operators, help owners solve real problems in how they operate these mines. Because mining's not going away in all these sectors. It's incredibly important input to the world economy. And to the extent that we can make it more humane, make the work more dignified, make it more comfortable, this is the contribution that we want to make.
I mean, do you see any challenges in terms of going overseas? I mean, we talk about a lot of the EV sector in China, they're dealing with overcapacity and the like. I mean, what sort of challenges do you foresee in your industry?
Yeah, I think there's really strong parallels with the pace of how EV sales went overseas in terms of being manufactured, being made in China. I think people are going to be surprised at the level of intelligence that autonomous trucks and autonomous mining vehicles are going to have when they hit markets overseas.
Yeah.
I think because the scale of some of these, especially these mines or these scenarios, is kind of outside of the belief of almost human imagination. And the ability of some of these, because in restricted scenarios, kind of something that a lot of autonomous driving companies neglect is the level of coordination that the vehicles need in a closed scenario, such as a mine. Some of these mines can be incredibly complex, up to 1,000 vehicles working together with excavators and diggers. And so we offer a product for operators. So we empower operators. We provide a technology solution for them rather than operate ourselves.
Is there much competition in the space? Who are your competitors now?
Yeah, there's lots of competition because it's a huge space. There's 8 to 10 possible competitors, including some OEMs of traditional heavy machineries that are in this space. However, we think that software companies like us that have a real robotics background are the ones that are going to make a real difference, because some of these systems are just getting more and more complex, and the computational efficiency that we need to get out of things like sensors and onboard computation is kind of we're totally in a new area.
Yeah, it seems like you're kind of going with the policy tailwinds in China here right now. When they talk about the amount of investment and people are putting into the Internet of Things, autonomous driving, AI, and the like, how are you benefiting from the sort of support that you're seeing in China?
Yeah, so in mining especially, because safety is such a huge concern and worker deaths incur such an impossibly expensive economic cost to operators, there's definitely a real push for regulatory allowances in some of these scenarios. And especially in closed scenarios, because they're not public road vehicles, they're not subject to traffic laws, kind of the safety kind of falls on the shoulders of the owners and operators of these mines. So there's, in terms of regulatory headwinds, it's really kind of been quite smooth for us. So last year, we achieved revenues of 410 million RMB with a cumulative average growth rate over 3 years of 260%. So the demand is clearly there, and everybody's in mining has been more and more accepting of these new kinds of technology and machinery. And that's kind of going back to this question of overseas, expanding overseas. I think that we would really love our potential customers overseas to kind of consider and to kind of welcome some of the solutions that companies like Cidi has to offer.
Yeah.
Because we think the benefits in terms of safety or economics are immense, and really some of the most complex solutions and development we can do in the mainland and bring overseas to kind of accelerate deployment for some of our overseas customers.
Albert, it's great to have you. Albert Sibo Hu, the Executive Director and CEO at Cidi, just listening today here in Hong Kong. Well, we are seeing live pictures now out of Brussels and bringing you the latest when it comes to what we heard at that meeting where EU leaders there have agreed to that $106 billion loan to Ukraine. The funding will be delivered using joint debt rather than frozen Russian central bank assets here. So this is Ursula von der Leyen there talking about this Ukraine finance will go beyond 2027, part of that next budget. Let's listen in.
Countries of origin legislation just agreed. And you also strengthened Europe's defense by securing a much-awaited agreement on the European Defense Industry Programme, EDIP, and the Defense Omnibus. And you made significant progress on simplification with agreement on several omnibuses, making life easier for companies across Europe. And last but not least, you successfully steered the initial work on the next EU budget. So you laid a very solid foundation for the next presidency to come. And I think the achievements that I've just described speak volumes about your leadership and your commitment to the European Union. Many thanks for that.
Prime Minister.
Thank you so much, Antonio and Ursula. When we opened our presidency in Aarhus, I said that Europe is facing the
All right, we are outside the BOJ where we are hoping any minute now we could hear from the central bank here on, of course, whether they're going to be hiking rates. It could be the highest we've seen in 30 years. And certainly that could be a bit of an interesting one for the market here and whether what this means. In terms of what we're seeing in terms of assets here this morning, the Japanese yen is actually getting weaker as we count down to this decision. We're talking about 155, 156 levels here right now. We, of course, as we are on watch, let's get to Carol Lai from Brandywine Global. She's portfolio manager and senior research analyst on, it seems like they're going to do it this time around and really pull the trigger, Carol. What else are you going to be looking out for in terms of the guidance for next year from the BOJ? Can they continue to hike more moving forward?
Right. I think this meeting is obviously very important because, there are two things that we're really looking at here, given the fact that, 25 basis points is already priced in the market now. So the two things that we're looking at is really the first, whether there's any changes in the estimate of the neutral rate range or the terminal rate. So the previous range used to be like -1 to 0.5. So if there's a change, that's going to be significant. The second item that we're looking at for as well is whether there's any signaling from the BOJ on the pace of rate hikes. So if you look at the pace that they've been going at, it used to be about 6 to 7 months per rate hike. So if they are going to quicken it, then I think that's going to draw a reaction from the market, obviously.
Yeah, in terms of the guidance, it's interesting, right? How do you think they're going to frame the rate hike path moving forward? I think there was some advisors that we talked to say it could be a kind of a 6-month sort of cycle. How do you think they're going to telegraph that?
I think that's why it's important, and it probably may come out more in, obviously, Governor Ueda's press conference later in the afternoon, where he can then guide the market But, I think the BOJ being always more cautious, they may want to hold back on that. And yet I think that's exactly what the market is looking for. In terms of pushing the yen stronger, we do need a bit of a signaling. So, BOJ, Governor Ueda could just say that, they do want to quicken the pace. And I think, everyone would be really reading his words word for word and trying to pass out what he's, trying to indicate to everyone.
If it's a dovish hike, does that mean yen can continue to weaken? And have we seen the most in terms of the yen strength already? Is that all priced in already, Carol?
Right. So, if you were to look at the yen, it's really, the levels of 155, right? It is rather weak. We're only 5 points away, or 5 to 8 points away from, the weakness, the ultimate weakness that we have seen over the past 2 years. What we are really saying here is that, if the BOJ does a dovish hike here, then next year it will be pushed into the ball, or rather the ball is in the court of the US and the Fed, right? Because then the Fed, if they are dovish and more dovish than the BOJ, then that means that the yen can still rally. But don't forget that if we are also going to see a pickup in global growth, then I think there are various signs that obviously, global central banks have, started to pause on their rate cuts. If you look at ECB yesterday, some of the other DM central banks may actually start moving or communicating about a rate hike. It will then lead to a pickup in carry trade. So if the US were to be more dovish, yes, the yen can outperform, but it will also not outperform versus other higher carrying DM currencies, EM currencies, so it becomes back to a carry trade. So I think where BOJ is now, they really need to communicate their policy quite well at this point.
Yeah, and just tell us more about the JGB market, right? When it's been a while since we've seen a 2% handle for the 10-year, 3% handle for the longer end of the curve. Where are you mostly positioned now on that JGB yield curve?
Right. So, we do continue to like the super long end part of the JGB curve. We do have a flattener on, basically, just to hedge out the super long end. And also given the fact that the front end, or rather the 10-year part of the curve, was still quite, undervalued, or rather overvalued per se. So there was quite a bit of space for the 10 years, rate yields to actually sell off a little bit more, especially if the BOJ comes in a bit more hawkish. So why we really like the super long end, and that part of the curve has really been hit recently by the concerns over Japan's fiscal position because of the large supplementary budget that came out. But if you look into the details, the new JGB issuance is likely to decline if economic growth continues to remain strong, and there are a lot of reasons to believe so. There should not be much concern about Japan's debt situation. In fact, the fiscal deficit has improved significantly in the recent years. So we continue to like the super long end. We think a lot of the fiscal premium is being priced into the JGB curve. So for now, we like that flatterness, but at some point, we would love to continue to add to that position.
And certainly, when you take a look, you mentioned about the carry trade. We still remember what happened back in 2024 when the yen basically jolted, right? And this whole unwind of that carry trade. Is there still a risk of that to unfold again, this unwind of that yen carry trade?
I think you hit the nail on the head, Yvonne. So if you look at the fiscal, if you look at the financial derivative part of the balance of payments account, you would have noticed that there's quite a lot of outflows that have been going out of Japan, and that is really being done in derivatives. It is, it has been building up very much of the second half of this year, and it is not. The levels are not similar to what we saw in 2024, but that build-up simply tells me that obviously if the BOJ were to come up quite hawkish here and to signal either they're fastening up the pace, or increase their neutral rate, there could be some unwind in the carry trade. So I think therein lies the danger.
Carol, I got to get your outlook for 2026. It's been a busy year for bonds. Obviously, there's been a lot going on when it comes to sovereign bond markets and developed markets when they're talking about the end of easing cycles and some of these DMs, and EM high yield still continues to perform quite well. Where are you kind of lying in terms of preferences for next year in the fixed income space?
Right. So I think heading into 2026, maybe I'll just split it up into two different parts. I think the developed market yields are quite different from the emerging market, as you pointed out. I think emerging market yields, especially in certain, in certain regions of the world, for example, in the Latin America, yields there are much higher, real yields are also much higher, and yet inflation is coming off to some extent. The central banks there have really raised the interest rate. So I think there's a lot of space for those nominal yields to really come down further. So we continue to like some of those emerging market bonds, especially in LATAM, and very selected in CBR as well. But when we look over to developed market bond space, we do feel that, going into next year, yields will likely remain sort of range bound to slightly higher. So why do we say so? Simply because if you look across the globe, there has been really quite a bit of supportive fiscal policies from the ECB, from Europe to Australia to Japan, and central banks the developed market central banks have been cutting rates. So there is a fair amount of favorable monetary conditions, and along with the fact that the U.S. tariff drags are going to peter out over the next couple of quarters, months, actually, it does point to a possible acceleration in global growth as we get past this mid-cycle slowdown. But of course, there's always still the risk of greater weakness in employment growth. And so we do see a bit of a limit of scope for a sustained move higher in yields. So within the developed markets, what we really like here is actually the UK gilts. They do benefit from falling inflation, deteriorating labor market conditions, and a fiscal drag. And I think the data over the past couple of weeks, especially yesterday and this week, has really shown that the UK gilts should be able to hold it and rally going forward. So that is right. How we are seeing global bond markets.
Carol, it's great to have you. Carol Lai there, Brandywine Global Portfolio Manager and Senior Research Analyst there. Subscribers can also turn to the terminal for more on this as well. At T-Live Go, it's up and running for BOJ as we, of course, await for that decision. Hear more from our, of course, commentary analysis from our expert editors. This is Bloomberg. Well, one developing story we're following, of course, is this press conference in Providence of Rhode Island. Now, U.S. police are saying that a man suspected over last weekend's shooting at Brown University has been found dead in New Hampshire after taking his own life. Now, earlier, authorities identified a person of interest in the Brown killings, as well as a later murder of an MIT professor in the Boston area. Saturday's attack at the Ivy League school in the state of Rhode Island killed 2 people and wounded 9. We'll bring you the latest there, of course, from that briefing as well. We have to kind of move away from this story. We've got to get back to, of course, markets. And really, we are focusing on the BOJ, set to announce that rate decision, largely expected to hike rates here as well. That press briefing from Ueda-san is going to be happening later on this afternoon. That's going to be key in terms of the guidance and the rate hike path moving forward. This is Bloomberg.